Yo, yo, what is up? Sorry, I'm a little under the weather. Annoying. I just started to feel not that great last night and then woke up today a little sick. So, not too bad, but yeah, I just let myself sleep all day. So, I think it was a good day to sleep as well. Because it was kind of like really choppy. It constitutes a bit as a squeeze for a number of reasons, but it wasn't like a true squeeze. If it was a true squeeze, we would have been way up here above 75, 70, I think. So the fact that we're holding around there, I think speaks volumes, unless you see NQ get sufficiently above 550 and ES above 75, 70, I'd say. I wouldn't think anything of this as far as continuation higher. We'd really need some impressive tech earnings that are coming up. I believe it is Google that is tomorrow. Yeah, Alphabet. We got Tesla. Wow, that's a big morning. Yeah, that makes sense. So we got on it. Wait, that's yeah. Oh, after hours. Ugh, it's annoying. Okay, yeah. I'm honestly debatable on if I'll take any trades tomorrow. Just because that is going to be huge, a huge effect on the market, how Tesla and Alphabet's earnings go. And then Thursday, let's see, we got Intel, RTX. Yeah, those are some big ones too. Intel, I think yeah, definitely the heaviest weighted. And that's basically it for the week as far as like big earnings. So a lot of weight mainly being put on Google and Tesla. So we will see. There was a recent report that came out actually on a lot of these tech companies with their AI investments, finding that they're doing some pretty sleazy accounting fraud. I don't know if you actually can call it fraud, but they're basically, let me get rid of this stuff. They're hiding a lot of their debt. So the money that they're spending on AI infrastructure, investment, everything into these other companies, they're putting it on, I think it's like a debt, like a special type of accounting where it's just like, it's not actually hard and final debt because the products themselves are not finalized yet, essentially. So it's almost like debt in waiting, if you think, which sounds so ridiculous, I know. But that's essentially what they're doing. So because of that, I think it was found for Meta that their debt was actually triple. Like we're talking, their total operating debt was actually triple what it is. Or what they have written down kind of on their disclosures. So yeah, that was, a huge realization and not a good one for sure. Basically showing that, yeah, they're also attempting to hide how much they've spent or just the total debt that they're running with on AI. So that's also not a good look for these, because these are hyperscaler companies. So, they're obviously doing well, but if they have like 2 to 3 times the amount of debt that they're telling us, then that's not good at all. Regardless, that changes their earnings forecast and everything drastically. So yeah, that was a pretty nuts realization, I would say. I was just marking out. I don't know if that standard deviation is going to work out, but let's just mark out one thing I saw overnight, basically. So we're on ES. ES is moving a lot cleaner than NQ these days. NQ is just sloppier on both sides. So I like to keep my eye on ES mainly, as far as standard deviation at least. So here we have, right here is, this is 8 p.m. open my time. So I'm MST. So New York time, that's going to be 10 p.m. open, right? So I'm going to mark out there is a swing high to swing low right after that new 4-hour open. This is a key open, includes 4-hour opens. That's a big open. So that is a 4-hour open right there. ES makes, let's just zoom in a little bit because this might be, I realize this actually will be tough to see. Make sure, oh, so there. Okay, where are we looking? Oh yeah, so zoom in the same on NQ. Okay, oops. So, swing high, swing low, right? Swing high, swing low. Lower low on ES. So ES makes the SMT. So that's where we're going to mark out standard deviation on. So I'll take that out, pull it. I just got to switch it because it's on just the regular Fibonacci. Standard deviation, boom, there we go. All right, so we've marked out our standard deviation path. So that's a manipulation leg on a new key open. It's a 4-hour open. So key opens are session opens, 4-hour opens, and lunch open. That's all. So that makes it pretty simple. Good. So blowing past the 2, not a big deal. That's kind of what I want to see. I want to see for this to be valid, I want to see a very strong move out of it. If this just like kind of came out and then danced and then chopped and kind of went up and then started going down, invalid. Don't even look at it. Sometimes it's tricky. There will be like an SMT temporarily on a key open, but then you realize that's part of a larger manipulation and it's going to end up going the other way on you. So you want to see this kind of V shape. Typical, like that's even like ICT stuff, right? Typical, you want to see like break a structure, like V shape out of here, whatever. And I want to see it continue strongly to that 2 standard deviation. And then from there, I don't mind if it starts to blow through it. And then what I really like to see is it uses this as support. It flips the 2 standard deviation into temporary support. Then we see some good reactions off the 2.5. The 3, also good reactions. So this is still valid. And then it ends up being the 3.5 is the overnight high. That is your London high. And then, there's definitely some good moves you could have gotten from this. It actually held right into New York Open. So how would you, and then, yeah, look at that, like triple top there. Just, that's insane. Talk about an easy target right there. But so how would you then narrow it down from here? Why would you take the 3.5 over the 3 or the 4? Well, that's when I would pair in the TR pocket right here. So switch that back to the fib so I can see my TR pocket. Boom. Okay, I'm going to move it over a little bit just so you can really see how it lines up. All right, there you go. TR pocket, 3.5, standard deviation, TR pocket, even more fine-tuned. That makes sense. I don't know if there's anything in here that ICT traders would take as like another reason to take as a rejection. I don't know. That's not really a breaker, no. Was it a 15 minutes? Nope. Yeah, so see? No gaps really to take it off of if that's what you're normally trading is off a gap. Maybe it was like a first presented like 1 minute. I've seen people talk about that. Yeah, technically, because that first presented wasn't disrespected and that you could constitute as a 1 minute rejection block, I guess. For me, I'm just going to look at the 3.5 standard deviation mixed with the TR pocket. I like that level. And then I would just simply look at the order flow right here. So we see the rejection. Look at this. So this is probably a stop out the way it came in, right? No one's banging 621 lots right at the top, right at the highs. You got to be an idiot with a lot of money to do that. So that's probably a stop out. And yeah, if that's gonna be high, I don't want to see it really get revisited. You see, obviously there was a couple attempts, right? See, more again, just absorbed immediately. Absorbed, brought down. Absorbed, brought down. And then into open, it ends up just squeezing. We'll get into that real quick. I just wanted to talk about those highs kind of thing. So yeah, that was your good overnight high. NQ. I don't think you could have really done anything similar. Like I said, I like to mark it out on the indice that creates an SMT. I find it more accurate. Sometimes you can still just mark it out. Just to give you a general idea of targets, but I wouldn't take it as hard and fast like rejection kind of deal. I mean, it was the 4.5, right? It was in between the 4.5 and 5 that ended up kind of truly rejecting, but that was already New York session. And then that just rejected, and then it just held, and the squeeze continued. And then it just continued higher. So yeah. But again, we have our new SMT, our new standard deviation path right at New York Open. You see this swing high to this swing low. It created the SMT. So I'll still mark that out, right? But notice I don't like that. We didn't get to the 2. And then we're starting to flail kind of thing right here. So I'm not going to treat this as a legitimate path for higher. It could be, but I just don't like the setup. I want to see right away. I would want to see that rip into the 2 and then reject from there. And then we can look at maybe, making our move higher towards the higher end of that range of standard deviations. But right now, I don't like the way that really moved. This was a really janky squeeze, kind of. And I was talking about it with a couple guys in Discord, just saying like, oh, I guess I could put this. You want to see high day on... I'll go back to ES. So the reason, because I know people are going to be like, oh, how'd you mark out that TR pocket? Why did you choose that high, that low? So it's just like, it's fractal, right? So I'm just going, this is the last major swing high to major swing low. The reason that I wouldn't do this one is because this liquidity, I hate saying that. I don't even want to say liquidity because I don't believe in that. But these lows were swept, right? So those lows were swept already after that move down was made, and that manipulation happened from this swing high. So that's why I take that swing high to that swing low, and that's what I'm marking out the TR pocket on, right? So I'm just dragging across like that. And then there you go. That, like I said, oops, a little off. Yeah, don't often see that. Usually if you see already I know it's like you have less faith the more times it's tested, just like the golden pocket. You want it to be a good reaction and then really just never revisit, or at least for the rest of the reversal move, whatever it is. So strong rejections and then just ended up being a squeeze. And then, like when me talking about fractalizing, TR pocket, right? Because you can mark it out on, you could have marked it out on this right here, just from the open. Oops. Just from the open to that most recent low, right? Let's zoom in here because we're going to start getting a little confused. So marking it out from that was just daily open candle to kind of Asia lows, I guess, right there, right? And boom, TR pocket, good rejection, straight down, all the way down to the lows, ends up just getting coddled, and that was for true Asia open, right? And then it just continues higher from there. And then after it breaks through, well, that's, I find if the TR pocket gets disrespected, if it flips, it then turns into a trend. So look at that. So we then move it. Let's take it from that other swing high to swing low. Okay. This is gonna get, I'm gonna get rid of this just so we're not overly confused, right? Okay, so I drew it from, no, not that. I drew it from that swing high to that swing low, right? Because we've done it on there. That small one gave the reaction, nice, really strong rejection, good. And like I was saying, if it gets disrespected, so we see price essentially on this larger time frame. See price move down, golden pocket rejects. That's it. There you go. There's a golden pocket rejecting too, right? And then it comes up. It doesn't produce a move lower. Actually, it doesn't make a new low. It actually just continues, squeezes through the golden pocket after Asia open, flips the golden pocket, uses that support, and then we're going through that TR pocket. Oops. We're going through that TR pocket. And then after that, it starts to really push a trend higher. And then what do? New York open happens, retest, TR pocket. Like right there. So retest TR pocket continues higher. So like I said, a lot of this is fractal, a lot of Fibonacci is fractal. But it's really cool to see how it works out on so many levels, right? TR pocket, if you wanted to really just scope out on NQ now, let's zoom in. So POCs, that's purple. It's untapped, right? Untapped POC. So already that can kind of sometimes, if we're close to there, it can be a magnet because it's untapped. untapped kind of previous point of control. So yeah, the TR pocket ends up being high day and rejects right, and then TR or the POC was that untapped naked POC was your literal top tick kind of right there. So anyways, that's a bunch on Fibonacci, standard deviation, and then POCs at the end there. So like how all that worked out. No, I still have not traded. I still haven't taken a trade. Just after last week, I want to be very good with my rules. Most Mondays I let settle unless there's big news or big data. Not necessarily big data, but like, if there's a good reason for the market to move. But Monday, I was definitely like, choppy yesterday. You saw a huge swing in net gex. So net gex, when we talk about net gex, think of the delta, like the difference, in the notional value of put contracts versus call contracts. These are options, right? So the net gex yesterday so NQ, it's translated from NDX. I'm actually going to switch it so translate from QQQ because that is more important. Anyways, but let's just look at, QQQ. So plus 6.21 billion, right? Yesterday, it was minus 3 billion. That's a pretty big swing, especially for tech. SPX, SPY, basically around about the same. So I haven't refreshed it. So it was 24. Yeah, there we go. Oh, there we go. All right. Sometimes I'm still building this site. It's a little finicky. So we're plus 26 billion now. So that is quite a swing because yesterday we were negative 40 billion. That's massive. So yesterday, they're likely due to the escalation in Iran over the weekend. What does retail do yesterday? They're piling into puts. They're just, free YOLOing, basically being like, how can the market not go down? If the market wasn't completely manipulated beyond all hell, yeah, sure, it should technically, we're very, very elevated, all things considered. However, volume is just lighter up here in general than much lower. So the market is just more easily manipulated in general. There's not as many big active players up here. And so, NetGex has a huge swing today. Basically, market makers, options dealers likely squeezed futures overnight. Overnight, Asia, London, a lot lower volume than New York session. So they're able to squeeze futures a lot easier overnight than they are during New York session. If it was just straight up opening New York from those lows, they would have a much harder time getting it up there. But overnight during Asia, London, a lot lower volume, a lot easier to produce a squeeze. And then the more you squeeze it, obviously, the more, you have other people joining you kind of thing. Like, oh, okay, we're in longs kind of thing. Or we should be long kind of, they get tired of just getting squeezed out of their shorts basically. And then so we open up the market quite high. We open up with a large gap up. If we're going to go back to SPX, that was a decently big gap we opened up with, right? What was that? 747, 744, 7. A 40-point gap. That's a pretty big gap for SPX, right? So large gap up we open with, and from then on, you probably get, I was sick or still am sick, so I could let myself sleep in. But what probably happens is you have a bunch of retail that piled into shorts yesterday, piled into put options on SPY, on QQQ, just the indices. That's what they like to zero DT or, short-term expiry kind of day trade. That's what those are the types of contracts that they're in on those indices. And they probably at open were like freaking out deep in the red. Depending on how much money they had in it, they just closed. And when they're closing out those contracts, so when they buy the put options, they're essentially they're borrowing these shares and then selling them on the market, right? So that's why it creates that selling pressure. When they have to close out, they're buying them back. So they're buying them back at a much higher price. Kind of that's just the loss in difference on the premium for them. They're not exercising them, of course. They're not even in the money, but they're buying essentially those shares of QQQ of SPY are getting bought back. So that creates some natural buying pressure that gets added to it when they start panic closing at open because they're deep in the red. So that mixed with probably some larger players really trying to push the market down, because there are definitely some large put options that are like week, 2 weeks out, a month out. I saw some VIX call options come in today. So that's a volatility index. Whenever I see VIX call options come in, I'm very, very wary of more downside. It seems to be the people that play VIX seem to just time everything perfectly. I almost never see people lose out on VIX calls kind of thing. At least the larger players. So saw some large VIX contract players coming in today. So we'll see. I'm basically going to play this as I'd like to be short. I'd like to stick to looking for downside below 75.70. I'll just be looking for eventually a seller to come in and give way. It might, I don't know if it'll even happen tomorrow. It might be a Thursday. It might be after earnings on tomorrow, because earnings are after the bell. We will see. But below 75.70, I'll still have faith in further downside. If we start to reclaim 75.70 and push higher, then I'll look at this to squeeze higher, basically, which is fine. And then same for NQ, above 550. I'll look for a squeeze higher as well. But yeah, we seem very pinned right now. If you look, I'll just go to the futures contracts. They're translated anyways. So, but yeah, we seem pinned at around these prices. Look at that. Basically, that's crazy, right? That is a large amount right there. This is essentially a gamma wall. So this is a concentration of call options. This is net. So just at this strike, there's way more call options than puts by a long shot. Obviously, you can see this bar. And so yeah, that just shows an over concentration of call options at that level. And really nothing else to call home about, kind of above or below. So that really means, like we said, people are waiting for these tech earnings to come in. I think that'll just be a really big indicator of what we're doing. They really got some explaining to do when it comes to them hiding their debt like that. Is it legal? Yes. The way they hit it. Is it bad faith accounting? Absolutely, for sure. So we will see. We will see what happens. And then, yeah, see, still a lot of sellers, NQ, this is going to have a lot of retail. A lot of retail love to trade NQ, or QQQ, we're thinking, right? This is just translated from QQQ or from NDX. So ES, NDX, or ES, SPX, SPY, you're going to have a lot more of the big boys, a lot more of the institutions playing around with that, with those options. So yeah, still a lot of players in the mix on ES, on SPY, and we're right in between two major walls almost. This put support and this call wall. Just think put wall, call wall, basically. Huge concentration right here. So yeah, very likely to pin us unless we get some news that really starts to push us either way. If we start to, we're below the flip, but we're just barely below the flip. It's not good enough. I'd want to be down here for us to really start, going lower. I'd really like to be below 75.10, 7,500, below 74.90. I think you can really start to add to a short position. But above that, I would just be very wary on how much this pins. And then if it continues to rise higher, then we're going to continue to squeeze higher, until we have some news or a large seller really take control. Today, the squeeze, just looking at the order flow, was pretty apparent. So we get right into market open. Again, we see just more trap buyers at the highs, really trying to push this market higher. Gets lower. You don't see any significant buys at the lows on ES. On NQ, yeah, nothing really too. See a couple sellers, attempting to push lower, but nothing really. But it's just getting scooped up. It's just getting edged the whole way through. It's just getting scooped, a lot of wicks. And then we start to see some buyers participating again. We start to see sellers really not wanting to give up that level, right? We're fighting back into that TR pocket. But mainly just we're looking at price, right? 74.37 or 75.30, 75.40. Now we're starting to get into a real midpoint territory, especially when we translate it back to options. We're starting to get into like some even territory where, a strong buyer, a strong seller could really take this thing one direction, but I think they're just pinning it before earnings. You see sellers attempting at the lows. These are big sells, right? 500 lots, over 500 lots back to back. So they're really attempting nothing, attempting even higher, nothing. So this is just a consistent squeeze, but I'd really want to see some big buyers starting to really rocket this higher. But instead, we're just seeing a real fight of absorption. CVD is really climbing. We're positive 10K for the day. So yeah, if we're going to squeeze, I want to see us to continue to reclaim higher price, specifically 75.70. If we cannot do that, then I don't believe this is a squeeze. I believe this is merely just a shakeout of all the kind of weak retail hands that were in puts yesterday, overly bearish with the war. They were probably very excited thinking it was just free money. Then they just got a little bit of a squeeze out today. But it still seems that there's quite a bit on the ES, on the SPY side, even on SPX and SPY for options, but even on ES futures, there's still quite a lot of big selling in the mix. So yeah, should be very interesting. We'll just watch price, but for me, I'm going to be no trades probably until Wednesday Asia session into Thursday. It is a no data week. I'm still very wary that Trump, with that garbage thing that he's doing, or his media company wants to charge $100K a month fee to big institutions and funds to get early access to his Truth Social posts, which is just absolutely insane. I cannot believe this is the world we live in, but whatever, we gotta roll with it. But yeah, that's the idea is floating. And then there is a theory that he will, like show off for his friends, essentially, that he's going to show them a test of how effective it would be, kind of being like, whatever the info is, I'm sure it'll be big info, but whatever it is, they will get their hands on it first. They will be able to get in position first, which I don't know how that's even fucking legal. Sorry for my swearing. And then they will get in position, and then that post will come out for the rest of us. Whatever it is, whether it's boots on the ground in Iran, whether it's what no one would expect, which would be him being like, we're pulling out, we're leaving, good luck, Israel, have fun. If anyone would do that, it would be Trump. As far as like the balls to just like off the cuff be like, no, we're leaving. But at the same time, he's fighting his own ego, because he knows he would really get it, being like, oh, that would have total flop that war was, like, Iran basically sent you back with your tail between your legs. And there's nothing Trump hates more than losing. You can tell just through his course history, the worst thing he can be called is a loser. He refuses to lose at anything. He won't even accept the 2020 results. Anyways, I'm not going to dive into that. So I don't believe his ego will let him do that, even though that is what they should do to let the world economy start to recover. I don't think that's going to happen. And there is a huge amount of troops in Iran, so it is very likely that they have been training and positioning for a boots on the ground invasion type announcement that we're going to get sometime soon here. We will see. We will see. Oh yeah, I wonder if I still have it up. SPX. You remember I was talking about that, my box, which was just essentially a very, very large time frame TR pocket. This was the box, right? Look at how we've just been suctioning to it, basically. So this is, I don't even know how far I'd have to zoom out. Look at me marking top. Who knows, right? I was kind of going like this. How was I marking it out? No. That would have been higher. Oh, although, wow, why didn't I have it marked out like that? Look at that. There's your top. TR pocket rejection. Yeah, I don't know how exactly I had it marked out before. I think it was like this. Let me zoom out even more. Go to the daily. Down to 2020 lows, I believe. Is that how I had it marked out? Yep. That's how I had it marked out. 2020 lows all the way up to 2025 highs. You know, when I say I was zoomed out, I mean we were zoomed out. That's what gave me that. But yeah, how interesting is that? That you just, you know, the most recent highs that we had from this year, kind of, and we're doing this. It looks a little bit weird because we're doing it almost in reverse as far as like the lows to the highs, but it still works. It's still a way of projecting, because there's a different type of projection tool that you could use where you would essentially connect dots. You'd be like, I think it's like you'd go like this. You'd be like, oops, how you would mark it out would be like that, and then as you drag it from that high down to here, it would then project levels from there. This way, I'm just doing this simpler because I don't want to have to do that. Anyway, so yeah, so that TR pocket right there was your actual high. Dang, didn't even realize that. Anyways, how I had it marked out before, which is just much more zoomed out, you know, 2020 lows to 2025 highs right there. Oh, no. 2020 lows to 2025 highs. There we go. So yeah, that's how I had it marked out. Anyways, that gave me the box. And now it is really suctioning to it. And I had said in many earlier videos, when I still had when I was very eager to sell this market around here, I did not expect it to pin as much up here and kind of distribute, but I think that's what it's doing. So I was basically saying, if we retested this box and then started moving higher, then expect like an ungodly, you know, parabolic trend all the way up to like, you know, I don't know, 8,500, 9K, like it would have been big for sure. But we have really been struggling in this zone. Yeah, we've really been struggling. And I even like more so now how I had that before, where I drew. So let me just real quickly talk. So yeah, us really holding in here, you know, I can see us kind of retesting these highs on some news. Who knows what the news would be, but we'll see. I just don't want to leave any gaps behind. If we leave gaps behind, then, you know, to me, that's just like, great. We're going to revisit them at some point. There's going to be some large, basically, reversion, retrace, and then we're going to make another move higher. I do not have that much faith in this market, but we'll see. But yeah, if we were to change it back to how kind of that newer projection would have been, right, that I was just marking out. Let's go 2026 highs from the 2025 lows of last year. It's a lot more recent for this range. Let me just make sure that's basically as close as I can get it. Looks pretty good. So yeah, if we want to be more accurate, we could go like this. Yeah, there's our TR pocket. So wow, yeah, good rejection from there. And then I would look for, you know, if we're going to sell the crap out of this market into like a holy hell of bear markets, then we're going to do some weird pump off of news into these highs. And then we're going to, like, not too much higher. I don't expect it to be too much higher. And then during the New York session, we are just going to have like an insane sell day. And we're just going to continue selling from there pretty drastically. It'll get really accelerated down here as we get near these gaps and kind of stuff. If we just sell from here and then we just start to make our way down, then I'll look at this as merely a retrace to then actually continue and go higher, believe it or not. We will see. Not sure, but this does look like it's distributing less with the way the action's been. There hasn't really been a lot of like immense kind of buying. It's more just like buying the dips, but the highs are also getting sold very aggressively. So we'll see. Anyways, yeah, that was a long aside on that. And this video is getting pretty long, so I don't want to go any longer. But yeah, so just for this week, I would just be nimble. No data. Don't forget Trump could say anything at any second. It's very annoying, but he could. I would just wait for those tech earnings to come out. I'd find it very funny if the tech earnings were, positive in some light, where they really start to move us higher. Excuse me. They really start to move us higher, and then we get near those highs, we squeeze near those highs, and then we have like some boots on the ground announcement. That's a total hypothetical. I have no idea if that's going to happen. 75.70 is your pivot. Ideally, if you want to really get comfortable in sells, you want to be below 75. Well, I would say now after today's session, I'd say you want to be below 75.25 really. Below 75.25, good start. And then below 75.05, even better. You can really get excited about shorts after that. Above 75.70, look for this to continue to squeeze. Likewise, below or above 550 on NQ, look for it to continue to squeeze. But however, below 29.040, and real specifically below 28.950 to I would say 28. I know most people like to trade NQ, so let's really just mark it out. Below 28.9, I would say 963, I think it was, or just go 960 to 28.993. That is your kind of like, I'll make it more exact, but that's your critical go, no go on shorts for NQ. I think below there, you can really get excited about shorts again. But above there, I'd be very careful. We're in this real like pin territory on NQ. So we'll have to wait and see how tech earnings play out. That could really drastically change the scope. I'm not going to make any predictions or anything before that because we have no idea how that's going to go. Anyways, long video. Sorry about that, but I feel like there was a lot of good info in this video. So I really hope it helps. And yeah, good luck. Stay safe this week. Take care. Bye.